let me take all this off. So like I said, like most of you already know, it's very necessary, okay, you do your top-down analysis during the week, okay, on weekends, especially for people that are trading currency pairs, okay. You always have a time that the market closes, and this time is not for you to also close, okay. Even though you do close, it's another time for you to have a rethink, okay, a relook at the market of trades in which you took during the week before, and trades in which you are also looking out for to trade in the coming weeks. So especially the trades that you should be looking out for too are your losses. If you had losses during the week, you have to come and reanalyze or backtest after price has now gone further, okay, to see what did I do wrong. Did I have an early entry? Did I have an early exit? Or what made me lose this trade? So it's very necessary you always have a look back on your losing trades after or during the weekend in which the market pauses, okay, the market breaks. So looking forward to is very necessary. You also have to do your top-down analysis for the coming market on what you should be looking out for on the certain set of pace in which you normally align with, and looking out for trade entries or trade projections for the coming week. So here we are on XAUSD, which is gold on the. So what do? We start from a monthly time frame to have an overall look of price. So looking at price here from the monthly time frame, price has actually been on an uptrend since way back 2015. Price has actually been on the uptrend. So this range here, in what you are seeing, the range here on the monthly time frame actually started 2020, which is due to the recession which happened a few years back, which is when most of you started to trade forex. But before then, price gold has been on a very decent trend to the upside years before then. So since 2020, thereafter, if you have been trading gold or you just came into forex trading 2020, this is what you have been trading. You have been trading a range, okay. This is a monthly time frame. Each candles here takes 1 month for each candle here to form and close, no matter how small the candles are. Like this one that just looks like just 1 week, this one that just looks like just 1 week, it actually took a whole full month of 30 to 31 days to form and close, okay. So like I said, if you entered forex trading since 2020, what you have been trading is this range. It's not really a proper trend of the market. So that's what we have been battling for the past 3 years, okay. For the past 3 years, we have been in something more like a range, not really a good directional move for swing traders, big firms, or the banks themselves. So on our monthly time frame, we have an overall directional bias to the upside. Structural highs or lows are not broken yet on the monthly time frame. So let's say you always take your trades from the monthly time frame, which only but a few people or only the banks may even be the one to do that. You don't take trades from the monthly time frame because of your stop loss and even your take profits. Imagine the wait you would have been waiting all those period. So now you have to scale down to your weekly time frame in search of areas in which you should be trading out from, and still looking out for the actual trend of the market, which still remains bullish. But now you can even see the range more better, okay. If I box this up, okay, you see price has been ranging on the weekly and the monthly time frame. So if you even want to have the best of entries, is when price is able to break either these highs or these lows, is when we'll even have the best set of entries for gold. But does it mean we won't be trading for the past 3 years? No. So that means whatever strategy that you're using should also be able to give you entries or confirmations from the lower time frames, okay, as low as the daily, the 4 hour, the H1 and other time frames. So what we have actually been trading for the past few weeks, okay, here on now we are on our daily time frame. We have been trading more of the sales on the daily time frame because price actually gave us a divergence here, a breakout of that divergence, okay, a retest on the neckline of the divergence. For those of you that know how we trade divergence, this is a neckline, okay, the neckline of that divergence. Let me zoom out. Let me use white color so you guys could see properly. Okay, price actually broke out of this neckline. What happened? Price retested. That's when you guys were having that range. Even I myself, I was trading. Those were the period I was trading buys of gold, okay, which we took one loss and one break even. Then thereafter we understood that the 4 hour time frame, which price was, we had this divergent on a higher time frame. We had the divergence on the higher time frame resistance level, which is the daily time frame, and the weekly time frame resistance level. Okay, price here on the main chart is going up, while on the RSI it's coming down. Okay, on the RSI is coming down. So if we were really spot on looking out for this divergence thereafter, which after taking the one loss and one break even around this area, I thereafter started looking out for sales, which I sent signals to you guys, and you all, most of you also benefited from the sales which we took thereafter. There are still possibilities that price could push down to the downside to continue with the sales because of what we are having here, okay, because of this chart pattern we are having here, okay. But now scaling down to our 4 hour time frame, you see our 4 hour time frame now, price has been selling all the way to the nearest support level, which is where we have this green line here, okay. This indicator also helps me to automated shows me the support and resistance level automatically. For those of you that doesn't really want to go through the stress or still finding it difficult to spot support and resistance, this indicator does that easily for you. But if you are good about spotting them, it's not really necessary that you need them, okay. But there are some other key confirmations I use them for, especially on entries on the lower time frame. But for now, I'm giving it out to people that are using my Deriv killer strategy. Then I'll show you how I actually use it for entries on the lower time frame. But on the other hand, I said I'm going to share the indicator with you guys when we hit a 2,000 subscriber mark here on YouTube. So you guys should keep on sharing our videos on YouTube and across your social media platforms. Those are your Facebook, WhatsApp, Instagram stories, and WhatsApp stories and the rest, so that we could grow as soon as possible and I could share this with you guys, and I'll also show you guys how to make use of it. But for now, just know that it helps you to indicate strong levels of support and resistance areas. Okay, so price, since remember our weekly and our monthly time frame told us buys, but our daily time frame was giving us sales, okay. Even our 4 hours is actually giving us sales. But from the kind of way in which I trade, okay, we have been trading all these sales. We had like 4 to 5 winning straight wins on gold, so which we had a very nice sniper exit somewhere around here. You can see it in our previous videos, okay. So on from the way I trade market structure and price structure, okay. So price has actually, even when we're trading the sales, price was forming a chart pattern for us. If you look in here, you see price had formed an inverted head and shoulder, okay, and an inverted head and shoulder. Price has been giving us inverted head and shoulder. This is the right shoulder, or the left shoulder rather, the head and the right shoulder here, okay. So even during our last few Zoom sessions, we spoke about price coming back to this one of these support areas, okay, which is this support or even this other block here. So that's why even people that use smart money, it's not still bad if you are very good in it. but all these things still falls in line with market structure if you understand price action quite well. So we had our areas in which we were to take sell buys from gold. Why did I start looking out for buys even around these zones when we did those analysis? Is because of these chart patterns that were being formed, which is the head and shoulder. But before the head and shoulder was even being formed, I using my confirmations and divergent strategy in which I use, which is still part of my strategy. Price was already forming a divergence here. Okay, here on the main chart, let me take this other one off. Here on the main chart, price was going down, then while on the RSI, price was going up. That's why you guys saw me going for a buying bias, okay, a buy projection for gold, marking out these two areas in which price could pull back to the upside, even when we did not even have a retracement as at then. What gave me the upper hand of this knowledge is understanding divergence and how it works. And this divergence is not just happening anywhere. Like I said, it's happening on the daily and the 4-hour market structure area, which is the support area. So when you see chart patterns forming on higher time frame support or resistance area, the same way it formed here, okay, on the daily time frame, it formed here on the higher time frame, the weekly and the daily resistance area, which aided this sell, the same thing that is occurring now. Okay, so for us to confirm that this chart pattern is going to hold real good, okay, we should be looking out for a breakout of these highs. Price to break out, to take out these highs, okay, break out and retest these highs. Price should break out and retest these highs again before you look for a push to the upside. On you look for entries on gold. So for me, I'll be looking out for buy opportunities on gold, but this has to happen. A breakout of this resistance area, retests back to this resistance area, then we push to the upside. But what if this buys doesn't happen? We still have an option B entry, but probably it may take quite a long time for it to happen, or maybe not. It's if this lows is being taken out, which is this head and shoulder, this inverted head and shoulder, okay, the head that caused this head and shoulder, if it's being taken out, it's as easy as us waiting for this support level to be broken and price doing what? Price retesting that support level again, breakout, retest of the support level, then we are going for the sales. But we're actually favoring the upside by 80 to 90% of price to push to the upside. But what if it doesn't push to the upside? Then we can we can go alongside with the sales. Okay, that's why when you are making your bias or trading, you should also give room for flexibility. When you are analyzing the market, you should also give room for flexibility in case market doesn't move the way you want it. Okay, what you could just do, or we always do, is always projecting the next possible move of price, but we don't own the market, okay, to be 101%. Though even though the trade, some trades may look like 101%, but if you are a good trader and a trader that has gained experience, you won't still take all the money, all your savings you have in this life and put in a single trade because you think that trade is 101%. No, you still be conventional, and even when you are risking aggressively, you are still risking smart. So that's actually it for gold. I don't know if you guys have any questions on gold.